Good evening, friends. Once again, today's session is a relevant and important session. The topic is called FATCA and CRS, and it affects us as Century as and also as an employee. So we need to see what is its implications. And this topic is little bit typical. So a deeper understanding will help you, and we'll try our best to make you understand in a most lucid and simpler manner. With that, let's delve into what is FATCA and CRS. With that, let me start with a small photograph. This is a picture of a two-story building located in Delaware, US. Now, my question to you is you can use your chat box and answer how many companies are located or could be located in this two-story building. I request all to use your chat box and make your wildest guess how many companies could be located in this building. I give you 5 seconds. And the answer is 285,000. Yes, you heard it right. 285,000 companies. In fact, the population of Delaware in US is around 897,000. We are speaking through the data of June 2012, and this data is coming from that New York Times article with a link given below. And the number of companies 945,000. Isn't it alarming? Yes, because most of these companies are offshore companies, or some also refer them as shell companies. These are the companies which do not have any business, do not have any staff, any assets, or any HR. This is only a PO box address, and many companies park their profits, their assets, and show that they are located here just to park their profits, and in most of the cases to evade taxes. Yes, you heard it right. The purpose is to either plan for the taxes or to evade the taxes. And many of these places are known as tax havens. With that introduction, let's see what is FATCA and CRS, why it came into the picture, what is its purpose, how does it work, what are its classification, and then after having an initial understanding of FATCA and CRS, we go into the details of what FATCA, its implications, the panel implication on us as Century, as well as our role. How can we contribute in terms of having the right collection of data and information, both for FATCA and CRS? Finally, you get a comprehensive understanding by knowing the comparison of FATCA and CRS, and then we have a Kahoot quiz. The session is expected to last for 45 minutes and followed by the quiz for 15 minutes. When you open our current app, you will see that we have some slides. I've taken the extract of it, which refers to FATCA and CRS. So just to relate to what we are practically doing, in our app or in our account opening form, we will ask the question, what is FATCA, as well as are you the US citizen? And also for something called as Common Reporting Standard and CRS, please mention the country from where you belong to. Further, the questions are, please share your tax identification number and whether your country issues the tax number. So this is just to give you the background. And finally, and first, we then start again into why this entire FATCA discussion started. So let's take an example. There is a company which is located in US, and currently the rate of tax in US is 35%. And there are many other countries where the tax could be as high as 45 to 50%. So what the company does, they transfer their profits, their investments to the places where the tax rates are either zero or are at a very nominal rate. It could be Switzerland, it could be UAE, it could be Bermuda, it could be Cayman Islands. And in that cases, they transfer these profits into a shell company. So in that case, they save a lot of taxes. This article I pulled out from the Institute of Taxation and Economic Policy, and as you can clearly see, this March 2017 article, Fortune 500 companies hold a record $2.6 trillion offshore, which means possibly US is losing around $760 billion of tax income. And what kind of companies could be included in this? Again, the data from the same source. You can see the big names like Microsoft, Apple, $230 billion, Microsoft, $124 billion of the profits parked offshore on which they are not paying taxes. And with this was an alarm, and with that, US then started this new tax regime called FATCA, because they wanted to ensure that whatever the profits are from a US company, and mind you that the US citizens and the US companies are taxed on their worldwide income. So if there is any income which is parked outside, that will also should have been reported in the US, the revenue, which is somehow is not reported. With this background, that why FATCA was introduced, and understanding that there is a lot of requirement to ensure that the tax revenue flows to US, FATCA stands for Foreign Account Tax Compliance Act. And this is a US law aimed at preventing tax evasion by the US taxpayers. And clearly, in my discussion, you could have realized that its main objective is to identify the US taxpayers who are hiding their tax assets offshore, and the US should be able to earn the revenue.
But what is this exactly? No, not exactly. FATCA is actually a US law and means Foreign Account Tax Compliance Act. It's really not as complicated as it seems. Basically, just like many other countries, the USA is dealing with a huge budget deficit. That's why the USA needs money. And what are the possible sources of income for a country like this? That's right, one possibility is through taxes. In the past, the USA didn't take full advantage of this possibility. After all, every US citizen who lives abroad actually has to pay taxes in the USA, but only a few really do so. This means the United States are losing a lot of money. That's why the US government passed the new FATCA law. Foreign banks, such as banks in Germany, are now supposed to identify which of their customers are US citizens. Private customers as well as corporate customers. Even all shareholders who are US citizens and hold more than 25% of a company are affected.
Germany is only as an example.
The banks then send this select information about their American customers to the German Federal Tax Office, in compliance with the standards set forth in German data protection laws. This central federal office collects the information from every bank, pools it, and sends this on to the IRS, the American Tax Authority. This sounds like a lot of work. Why actually? Why should people in Germany care about the tax laws in the USA? Can't we just ignore them? Well, we could, if there wasn't this little addendum to the FATCA law. Every bank that does not cooperate will automatically be charged a 30% penalty on all yields in the USA. This doesn't only affect the bank, but also the bank's customers, the Germans as well as the Americans. A regular transfer from your great-aunt in California, yields on Apple shares, or interest on US government bonds, only 70% would ever be credited. The Hupu
So we saw the video about the FATCA as well as its objectives. Let's deep dive into further details. So in FATCA, what happens? Most of the institutions, which are the financial institutions located worldwide, they have, and there is an agreement which the US has signed with most of the countries, which is called Intergovernment Agreement. So the local financial institutions in various countries will report to the local authority, and then the local authority will report indirectly to the Internal Revenue Service, which is the US government. We have seen the background why it started. The US was losing billions of dollars, and the desire to have more revenue, which was being lost. And this is the cycle of the movement of the document flow. We will see the documents like W8 and W9 forms collected, the information which is collected by the local regulatory authorities, like in UAE it is Ministry of Finance. And finally, when all the institutions report through the Ministry of Finance to the Internal Revenue Services for the income of the US people, it is reported, and then US will then monitor the tax implications. Along with FATCA, it's also good to understand what is CRS at the same time before I go into the details of CRS. CRS stands for Common Reporting Standard, and this is a global standard for automatic exchange of financial accounts between the tax authorities. So currently, when we saw FATCA, we know clearly that it is for the US citizens to report their worldwide income to the US government. And later on, it was common reporting standards, which was introduced by most of the countries, which is 123 countries, where the countries again sign the agreement that if there is any of their citizens staying abroad, they will report to each others so that they know that there is no tax evasion. This is developed by an organization called OECD, Organization for Economic Cooperation and Development, and in which currently 123 countries are signatory. Purpose again, that if any citizen of a particular country is evading the tax by parking his funds offshore, they can be held liable and responsible for that. The authorities will also know and get the complete picture of the offshore assets and income, and they get the right amount of tax. So, with an illustration, whether it is FATCA or CRS, so there is a taxpayer in country A and he has a bank account in country B. So, currently, if I have a bank account in country B, for example, if it is UAE, we will report in the country B to the Ministry of Finance. And if the country A is US or any other country, then UAE will report to that particular country. For US citizen to the US, and for non-US citizen for the other countries. And finally, if you see the flow in terms of how the reporting works, various institutions collect the information, report it to the Ministry of Finance. Ministry of Finance then report to the various tax authorities. Here, if you can see on the headlines, the word on the left is CRS, which is Common Reporting Standard, and on the right hand side, it is AEOE, which is Automatic Exchange of Information for the various countries. We have seen what is FATCA, what is the CRS basics, how does it work, what is the basic purpose. Now we look into a bit of more details about the FATCA and CRS classification. Now, when you refer to most of the forms relating to FATCA and CRS, you will find a lot of terminologies, active NFFE, foreign NFFE. So to keep the things very simple and for your clear understanding, let's make two categories. One is a financial institution, for example, Century Financials or any other financial institution. There are four categories. We will see the definitions. And the second is a non-financial institution, where they have given the wordings as non-financial foreign entity. So one is a financial institution where the reporting is required under certain situations under FATCA and CRS, and non-financial foreign entity where the reporting generally is not required. Now, if you look into the further classification of financial institutions, under FATCA, we refer to the institutions as FFI, Foreign Financial Institution. And under CRS, the same is referred to as FI. So not to be confused. Similarly, the institution like Century, when we need to report it to the authorities like Ministry of Finance, we term Century here as reporting financial institution, because I'm reporting to the authorities here. And there are some exceptions where some institutions need not report, maybe the government institutions and certain large organizations. So they are not required to report, so we keep it separate. The other category when we see as non-financial entity. So non-financial entity definitely means who do not have any income coming from the finance side. So again, in the terminology which is used for FATCA, we are saying them as NFFE, which is non-financial foreign entity. And the same thing which is used for CRS is non-financial entity. Now, to this, there is a further classification when I say as active NFFE and the other is passive NFFE. Now, what does it mean? Active non-financial entity is an entity who is not getting income from the financial sources or financial investments. That could be the retail and manufacturing and other sectors. So, people who are trading and manufacturing, those do not fall under the FATCA and CRS because they are into non-financial entity. But along with that, there are some passive entity. Passive entities like those who are earning income without actively working. For example, investment income. So you don't need to work actively, but there is an income which is getting accrued to you. That could be income from dividends, from interest, in some cases from rental income. So those income are called passive income. Now, why this classification is done as passive income and active income? So, imagine a person who is staying in a particular country. He will move his funds, he will move on his investments to another country. And on these investments, he earned various kind of interest and dividends. And this he is not reporting back home in his own country. If his global income is taxable, he should have reported. So, this is a passive income, but which means it is an investment income. So what the law says that if someone is earning income which is 49% or below is passive income, he did not report, which means he is just earning, it need not be reported. But if the income is exceeding 49%, which means going beyond 50%, that income also needs to be reported for FATCA. For the simple reason is that a foreign person may be earning some income from his passive and he is not reporting to the authorities. So once again, because this slide is important, we have two categories: financial institution, non-financial institution. Financial institution, depending upon the categories which we will see, report to the authorities. Non-financial institution, they do not report to the authorities, but if they are passive income earners and having more than 50% of their income coming from the passive sources, they do report to the authorities. Now, if you see in the slide, I mentioned financial institution. Now, these financial institutions are categorized into four different categories. So, again, only for your basic understanding. So, if it is a custodial institution, which means they are holding assets as well as the financial instruments with them on behalf of the customers. Secondly, is depository, which is a bank which deals in deposits. Third is investment entities, which is conducting investments. They have some money market instrument, they do the trading and as well as other securities and help the customers to do the trading. And this is the category where we fall in as Century. And the last is insurance companies. So the slide is shown to you just to understand from where the Century comes from, under which category it falls to, because it is a financial institution, and that is the reason we are obliged to report to the regulatory authority. I did not go into the details of this classification. Again, going back into what we have seen right now, FATCA, its classification, FATCA in detail. Now we will see a little bit more as to what is FATCA's implication and what are the various panel provisions, as well as a little bit more detail on the FATCA side. So far as let me again start. We have some why FATCA and CRS came, what was the reason of its origin from US, and then finally moving into a bit of classification. Now going to more detail. Again, this chart, not to be confused, you can see that there are two broad areas: reporting institution, non-reporting financial institution. And in the reporting institution, we are reporting only for those to the Ministry of Finance. Non-regulated need not report. Now, worldwide, these are the countries who have implemented FATCA so far. So, these are the countries where the information is getting exchanged and it is reported to the US. You can clearly see UAE is in the green box here, and accordingly, then we have signed the agreement for intergovernmental agreement, and so we are obliged to report to the authorities. This is from the Century's point of view, where we analyze based on our licenses, and practically we are looking at the licenses where Century is category 1 and it is going to be acting as a dealer broker, and it will be also receiving funds from the customers. With that background, which category we fall into? So again, doing the analysis, we have 4 categories. So first of all, are we a reporting financial institution? We are a financial institution. We fall under the investment entity. Then we look into further. If you see on the graph on the left side below where there is an investment entity, the definition which comes under point number 1, it shows trading in money market instruments, which we do not do. But the second part is foreign exchange, interest rate, index instruments, transferable securities, or commodities. So this is the category where we fall into as a reporting financial institution. Now, coming further, as I told, we are going into a little bit of more detail for FATCA as to who has to report under the FATCA regime. Broadly, it is a US person. Now, who is a US person? He can be any US citizen or a US national. Further, it can be any company which is owned by a US corporation or having a partnership with the US entity. So to keep it simple, FATCA, we have to identify if he's a US citizen or a US residential and whether the company is having a US origin. Further, FATCA has even gone to further detailing that even these people, if you see on the box on the right hand side, he need not only be US citizen or resident, but if he have a place of birth or organization in US, even a US mailing address, a US telephone number, or if he gives a standing instruction to transfer funds to an account in US or has given a power of attorney to a person who is based in US, still, or even have a hold mail or care of address for the email to receive an email in the US address, still he is liable to report his transaction for US FATCA. So you see, it is not the US person, it is also the various indices, various details which come to identify the US person where the reporting may come. So now you realize that just by knowing that a person is a US person is not sufficient. We even need to deep dive into the various categories that can he fall under the definition for a reporting for the FATCA purposes. So, what are the details reported for the US citizen? The deposits, custody, equity and debt interest, his investments, or cash value in insurance contract. Now, mind you, CFD trading, because of its nature, it is not an exchange regulated product. CFD is not allowed in US. So, from Century's point of view, when we have a situation whether we should onboard a US citizen, the answer is if the US citizen is resident of UAE, he can open an account. But if he is not a resident of UAE, he cannot open an account. Again, this is the US companies which is owned by the foreign entity. And here in all these foreign entities, if the ownership is more than 25%, which means that the person can make a decision or can take a decision on that company, even that has to be reported for the US FATCA purposes. Now, coming to our role as Century and as an individual, what we should be doing, what documents we should be collecting. One is that you have seen that in our portal, we have a simple checkbox that are you a US citizen? So that is like a self-certification where the person is saying yes. In the future, for example, if it is an entity, and especially where the account value for any investment is exceeding $50,000, we are even required to collect forms. For an individual, it is W9 form, and for an entity, it is W8 BEN form. So along with this self-declaration, currently the regime says that you are doing your due diligence and you are meeting with the requirements. So as like in KYC, we collect the passport copies, we collect the other documents, we are also collecting the address proof. Now, many people in the past, you must be wondering why for the KYC we were asking for the address proof. We understand passport because it is for the identification purposes. But now you realize the address proof now becomes critical to identify where the person is actually residing. And that becomes critical as a place of tax residence to know that whether he is liable to pay tax in FATCA or CRS. So simple document like a Deva bill or to even to know the utility address becomes very crucial to identify his address. For entities, it is Form W8 as well as the ownership documents which we collect for the KYC purposes like his entity registration and other documents. This is just to show you what kind of form is there for the W8 and W8 bend. Definitely, it has a lot of details. You can always seek our assistance as well as the assistance for the compliance. And this is just to let you know that this is an important mandatory part of the onboarding requirements, either which is happening on the online portal or for the entities on the offline portal. Why we are doing this session today? Now for Century, our year ending is 31st December 2023. So for all the transactions from January till December 2023, all the transactions which fall into the criteria for FATCA or CRS, we have to report by June 30, 2024. You must be wondering why we are doing this exercise now. Imagine there are hundreds of customers onboarded and we have not collected the information and documents now. And at the end of the year, we would be in a very chaotic situation. So the decision and the importance to do it and collect the required information is now. And what is the implication if I don't collect? I don't follow the requirements. These are the panel provisions. Failure to apply the due diligence to identify, for example, this is for the FATCA that he's a US citizen, 40,000 dirhams. If I do not collect the self certification form, 1,000 dirhams. Failure to report, 20,000 dirhams, and so on. So these are not negotiable fines. So as soon as an assessment is done and we or the authorities find that we are not complied with, there is no immediate answer, but they will first have the fines imposed. So to understand the consequences as well as for the learning, again touching only on the US FATCA point of view, to summary, this will help you to strengthen the understanding when we learn and discuss with the clients also as well as to play the Kahoot. The US citizen tax evasion is a objective to get to avoid it as well as for the financial institutions. Key requirement, identification of US indicia, as which means not only the US citizen but also the PO box number, the telephone number, and other different ways in which we can say that he has some connection with US. Various compliance tools, how do we onboard? So the onboarding team has a lot of role to see that the selection and assessment is done. Data management system, our IT team has a very important role to see that the information as well as the documents are collected and kept on record for future assessments. Penalty for non-compliance, as you see, 30% of the assets or anything which is remaining in US that could be deducted. And not just the fines, it has a lot of reputation damage to the institution. With this, we have completed a part sharing on FATCA. Now I'll take you to understanding about CRS.
Of collecting taxes from US citizens living abroad. Many other countries thought, that's actually not a bad idea. It's a tricky thing that with tax dodgers. Sometimes people prefer opening accounts in foreign countries, holding millions there, and their native country is left empty-handed. However, Citizens living abroad often simply don't know that they are liable to pay taxes in their native country and become tax evaders inadvertently. To avoid all that, numerous countries implemented CRS nationally, a common standard for banks which was developed by the OECD and which regulates what data has to be collected from customers and where to forward it to. In this way, there will be more tax transparency worldwide. There are already 80 countries participating and counting. And this is how CRS works. The financial institutions of all participating countries, like the Hypovereinsbank in Germany, have to classify their customers as verified and not verified.
Again, Germany is only an
Verified are
example.
those customers who have a tax residency in another CRS partner country. Then the Hypovereinsbank sends selected information like name, date of birth, tax residency and tax identification number, account balances and yields of those verified customers to the German Federal Tax Office in compliance with the standards set forth in German data protection laws. This central federal office collects the information from every bank, pools it, and sends this on to the respective foreign tax authority, in accordance with the tax residency given by the customer. In this way, participating countries can be sure to receive information about foreign accounts of their citizens, thereby helping ensure that the correct tax is paid. This means a lot of work for the banks. It's a good thing that the Hypovereinsbank is already proficient in realizing the FATCA law for a few years. Under CRS, the customers are only additionally asked for their tax residencies and tax identification numbers, so there are not too many changes, just the amount of verified customers.
So with this video, we have seen a brief understanding. You will see there is a lot of correlation in the way which FATCA and CRS works. So FATCA is for the US and having the worldwide collection of information, and CRS is for the worldwide collection of information, but from the different countries. Now, background to CRS, again, when the people realize that, okay, for if they can do this collection of information and avoid tax evasion for US, why not it apply to other countries also? So globally, the agreement was signed, as I mentioned, with 123 countries, and it is an automatic exchange of information because there is a portal in which all the countries will upload the information, and automatically at the end of a specific period, the information is shared with the respective countries. This is the repeated slide just to recollect your understanding about CRS and FATCA. So here is CRS. What is reportable account? It is the same thing which we have seen in the initial slide of the table, that it is reporting is done by the financial institution, and also if he is a passive NFE, so a passive non-financial entity where the holding is more than 50%, even for their income, they need to report it to the respective institution. Now the question comes, if a person is staying in UAE and he has a UAE resident and his income is in UAE, does he need to report for CRS purposes or FATCA? The answer is no, because the whole objective is to see that a person is having an income offshore, means outside UAE, which is not reporting to the home country. So a UAE person, if he's staying here and he's a resident here and he's a tax resident here, for those people there is no reporting. So for CRS, the reporting is for non-UAE resident, tax resident, and non-US resident. For FATCA, the US resident and the US companies. There could be some challenges which comes to us in identifying that, okay, if the person is in UAE, whether and he's also having his assets abroad, so do we need to report it? We'll come in and we'll see that in a later slide. So recollecting with the table for the CRS as well as FATCA, this is the bifurcation. So reporting institution and only the account which is held by the passive NFE for the dividends, interest as well as rental and other income, they are reported to the authorities. So I'm only focusing on the yellow part right now. Giving to a global idea, 100 plus countries which have implemented and signed the agreement with the OECD. Again, the same flow, which is therefore identifying FATCA for Century as an institution. So you see that we have to see which institution category we fall for the financial institution, and thereafter Again, we fall in the same category on the left hand side, which is interest rate, index instruments, transferable securities, and the futures commodity. Now, what are the details to be collected for CRS reporting? So, we have a portal, which is the automated system in which the following information is to be collected. Now, this is important for our onboarding team, for our IT team, as well as our people who meet the customers to ensure that we have this information collected. And as you see, the information is the person's name, address, tax identification number. In the future, for the tax identification number, like for example, if it is India, we say a PAN card. For another person, it can be any other card. So we need to collect a copy of the document to ensure that the tax number is correct. So there is a tax information, the account number, the account balances, and the information about the various incomes which he has. So this is the similar information which is collected for both FATCA and CRS. Taking a little bit more extension to what is happening for the CRS. Now, in UAE we have golden visas, and in the current markets, you see there is a lot of spike in the investment interest for purchasing property. So, if a person purchases a property beyond a particular threshold limit, which is maybe around 2 million dirhams or something, then he gets a golden visa and he becomes a resident for UAE. He gets a 10-year visa. Now, the challenge is that a person has purchased a property and he has become a resident here, but it is possible that his main source of income is in a different country. Maybe it is Germany, or maybe it is US, or any other country. So, his purpose to purchase the property could be that he's parking his funds here, and possibly he may not be showing the income from those funds to his home country. So just by having the residency here doesn't mean that he is not liable for tax in his home country. So the whole idea is to ensure that the schemes which are coming, possibly to some of the schemes could be used for the people to evade the taxes. So under the OECD agreements, this residency by investment schemes are considered to be a category for high due diligence, and we need to collect certain specific information about the customers. What are the documents which we normally collect, which is the UA residency visa? So far we believe that, okay, if we collect the visa copy, we assume that he is a resident. But along with that, if it is now a golden visa or any investor visa or anyone which is showing residency by investment, we need to ask the following questions. Did you obtain the residency by investment scheme? Are you a resident of any other country? And are you paying tax in that country, or have you been subjected to personal tax in that country? This is the format which is not yet finalized, but possibly very soon in this manner or little bit modified. We will be making some changes and uploading into our app or into our website for our account onboarding, which are the similar questions for residency by investment, and this is mandated by the Ministry of Finance. One more important thing which comes when people will say that, okay, I have collected the information and I know he have a visa, but it is also possible that the person has stayed here, say, only for, say, 10 days. Does he become a resident here? So to answer this question, in UAE now, for the last from June, there is a UAE corporate tax. And for any tax purposes, we need to identify whether he is a resident, because only then he will be paying the tax. So the Minister of Finance on 22nd February on 2023 issued a cabinet decision which stated that if a person is staying in UAE for more than 183 days in one calendar year, then he is a resident of UAE. If he becomes a resident of UAE, if you refer to our previous slides, he need not report for the FATCA purposes or CRS purposes if he's not a US citizen. Now the question is, if he's staying in UAE for less than 183 days, then it becomes an obligation. Although we go by his declaration, he says that, okay, I have not stayed in UAE for 183 days. But if he's not staying in 183 days in UAE, then we ask the question, okay, which country are you staying? Are you a resident of another country? Are you paying tax in that country? So you can see how the FATCA, the CRS, the UAE tax law, and also if you remember, there was another tax law called economic substance regulations. We will not go into the details how they are all linked together. So coming back to the documentation part, we have seen the FATCA documentation. We look into the documents for CRS purposes. The self-certification form, which is compulsory, we are doing that right now under the portal, but in some cases it could be in a physical format. And for entities, again, the self-certification form and the other trade license and other documents. For companies, we are looking for companies actually who are having their residence or their head office outside, their place of management, their place of shareholding, their voting rights if it is in another country, and which means the decision making is happening in another country, but he's staying here and income is coming here. We need to report those entities also. These are the implications of not following the law under CRS. Self-certification, if it is inaccurate, 20,000 dirhams. If you are not collecting the documents for self-certification, 1,000 dirhams. Failure to report, it lasts from 5,000 and may go up to 40,000. Any other non-compliance on this CRS, again a fine of 10,000, may go up in certain specific cases to 250,000 dirhams also. This is a slide which is actually extracted from the return which we submit for the Ministry of Finance. And this slide gives you the actual data fields which we need to input. So the work is important for our onboarding team, for our IT teams to see that these informations are collected. If you see in the yellow part, it's saying tax residency 1, which means the person is staying in UAE. Suppose he's staying here for less than 183 days. We ask, are you staying in another country? If he says yes, then it is tax residency 2. So we fill that information also, and we collect the details of the documents like a card or a tax card relating to that country also. We also identify when did you open the account, is it closed, is it dormant. So quite a bit of data as well as the information to be collected here. To summarize, we started by showing you a two-story building, giving the implications on the number of companies which are established there. We also looked into why people go for the tax havens and what the US government did to ensure that they earn their revenue, the way the FATCA started, the documentation for FATCA, and now we look into the summary of company reporting standards, how we identify the tax residency, the collection of self-certification forms. For entities, again, finding that is an institution or a passive NFE and complying with the requirements by customer identification. And mind you, even the due diligence to know that the customer is given the right information, whether he is actually a US citizen, also lies on the institution. So we have a lot of work to be done at the compliance side and as well as our team to ensure that we collect the right documents. And another requirement, you'll see that there is a compulsory requirement for CRS and FATCA training, which we are doing today, as well as having the right policies and procedures, which is also getting inspected by the authorities in due course. How are you implementing the various scenarios? So we have covered the entire gamut of FATCA and CRS. We went to the history. Now let's look into a summary nutshell. When we compare, how does FATCA and CRS look like? Side by side comparison. So who has to comply for FATCA? US citizen, CRS non-US as well as the citizens in other countries. What accounts are to be declared? Individual, corporate as well as passive accounts, which I told you for the investment income. Purpose to identify US citizen for CRS non-US and non-UA citizen. Tax information to be collected. The financial institutions in scope, which for us I be mentioned as the investment entity. What is the information to be collected? We have seen the slides in detail, and in FATCA and CRS it is almost the same. And the nature of income which is getting reported, which is interest, dividend, and other income. So with this, we have run through the entire summary. The slides will be available. This presentation will be available as a recording for you to refer and to have your clarity of your better understanding. And just to take back to you where we started, we have our FATCA and CRS extract into our app as well as on the website. So this is, we ask for the information. Are you a US resident? Now you know why you're asking this information. For common reporting standard, which country you are a tax resident of, we went into the details. Similarly, if he's giving the declaration that I'm not able to obtain the TIN number because it is not applicable, as well as they are collecting the tax identification number, and then he gives the necessary declarations. Finally, reminding back that there is a two-story building which is having 285,000 companies, tax haven, shell companies, and from there we started our journey to understand the FATCA and CRS.